clearly China is trying to wait out President Trump, but there is an economic cost to these tariffs. Each one of them in isolation has not been that big, meaning the tariffs, but on a cumulative effect of those tariffs, it's starting to get a bit costly.
Dan, what are the other ways that the U.S. We've talked in the past with Derek Scissors about how sanctions could be an effective tool, ways of limiting the business that China can do here, or the business that the U.S. frankly could even do in China. I mean, what are the other options? It doesn't even sound like it's worth asking because we know that this is the president's tool of choice. So the market is now already speculating about these tariffs going from 10 to 25%.
Right.
Are you guys worried about the same thing?
Well, first, all the tariffs that have gone into effect haven't gone away yet, right? So we've been getting more tariffs, not less tariffs. And I would argue that the average tariff into China is about 10%. The average tariff into the U.S. is 3%. And Trump told them at the beginning, if you don't come down to 3, we're going to 10, and we're getting close to 10. But at some point, then you start getting into these non-tariff barriers by not approving cross-border mergers or delaying any type of foreign investment that come in, right?
Mm-hmm.
So there are definitely tools on both sides to prevent that. And the question is whether this latest round of tariffs is enough to get China to start saying, okay, maybe we went too far. Maybe we should cut a deal. And if they're not going to do ag or they're not going to do fentanyl, those are minor. How are they going to do structural reforms?
Absolutely.
And so the president said, let's see if we can change that negotiating strategy by putting tariffs on all of these goods. And I don't think China thought Trump would do it because they are consumer goods. So we've kind of crossed over that line. We'll see how China plays it.